Hey, what's going on, Steve? So, I do use the trading spectrum, and that is based upon a formula of, I think, the best walk forward analysis. So, if I open this up, I open trading spectrum, it's based off of walk forward analysis. I'm guessing it's going to the Q spectrum, it's pulling all of the cycles, and then it's finding the best SZ score with the walk forward analysis, and that's kind of just that's the best I do. I basically find three cycles that I force a time period on, and I've chosen the decennial, the annual, and the 4 year, and mostly because it seems to be it worked really well, whether it's a 10-year seasonal, a annual seasonal, or a 4 year period, which happens to be, I think, the cycle for the PMI and its business cycle. But and then I do the automated AI smart math cycles, which is the Q Spectrum 2, which finds all these cycles and creates a hybrid line, a smart cycle, and then it's fast. It's faster than the hard cycles, and then trading spectrum is just going into Q Spectrum 2 and finding the best walk forward analysis cycle. So I try to see the math from multiple angles. What's the best walk forward analysis? What's the hybrid community line saying? And then what's the 10-year seasonal, the annual seasonal, and the 4 year? What is it saying? And that's so the idea is just to find the confluence, and specifically the confluence among the fast lines, the Q Spectrum 2 and the walk forward analysis trading spectrum, was saying to be positioned to lean bearish until we get to the bottom that it's saying, which is around, I don't know, like 12.5, 12.9, 12.10. And that's kind of just what it's saying to me. The hard cycles are saying, like, hey, start getting ready for a reversal around 12.6, 12.7. I think 12.7 is the weekend. Yeah, it's Monday. So, yeah, start getting. Oh, no, no. It's Tuesday, Wednesday next week. But, yeah, start getting ready around 12.5 for a reversal to the downside. That's kind of just how I go about it. And the idea, it's a little bit of a game of chicken, trying to figure out which one's the one to listen to. But that's kind of why you go for other edges. And other edges I look for is like this money flow index for Williams Flow Money Index, and this one's on the 60 minutes. So this is like a more shorter time frame period, and then there's the daily money flow index that I look at, and you can see it's positioned bearish. So the idea is looking for reversals for bearishness, and then on top of that, I look for market structure breaks. Right now, it's getting kind of weird, and the market structure breaks, the ones that are significant to watch, it's not really playing out the way I would like. So if I go to the ones I look for, so the next one that's bullish that's alive is the daily, and we're gonna find out if we end up breaking the daily to the downside here, and it might just happen. We're threatening for a daily breaker, but I would have liked an H4 breaker where another leg up to where we would have an H4 breaker to the upside. But it's something that I'm not sure about, and I just try to line up just the market structure, the best breakers, and what I'm willing to trade on the setup, and the timing solutions. And the timing solutions could be leading a little bit, but at the same time, like I try not to make it too much of a leading thing, and make timing solutions more of a confirmational thing, and look for have a certain bias going in with timing solutions, and the money flow index and what it's saying, where the institutional money's going. So then I could just join the wave, or ride the wave as if a surfing analogy of the best setup, the best wave, being first and riding on the coattails of just you know the overwhelming force of the war between the Bulls and the Bears, and that's just the main goal. It's a hard game, and the goal is to be able to play to where you're on the winning team of the Bulls versus the Bears, and that's kind of why trading at a certain time works, because you want to trade when most of the activity of your team is going to be represented, like the Bulls or the Bears, and your bias with that as well. So that's why I look at Williams Money Flow Index for institutional bias. That's why I look at the timing solutions, because all the edges stack for Confluence, and I look at the walk forward analysis part and timing solutions as just like one piece, one tool in the tool belt, and I think it's important. But I don't really try to dig too deep into it, because I would be overfitting in some way, to where I don't know. Sometimes it'll work and sometimes it not. But the whole goal for me is just use the best of the tools that I find that work for me, and then match that with market structure breaks and reversals, and the timing with that. So then I trade less, and I trade more with more impact and more conviction, or with more confidence when I do my small sizing. So then I don't have to have any doubts about my bias. But for the most part, the goal is just to filter out the noise, and timing solutions helps with that. And sometimes the walk forward analysis is right, the best one, and sometimes it's not. And that's kind of just the the nature of the game. The nature of the game is that when it all comes said and done, you might have a 50 or 60% win rate. Heck, sometimes with timing solutions you could get 80, but all in all, you're going to have some losers in there, and it's going to be down to your risk management, and that's the main edge right there. And if you erode that edge, if you can't keep that discipline, then no amount of walk forward analysis or win rate's going to save you.